if I look at Q2 and the ETF inflows that we've seen, particularly strong in Europe, where we've ranked second in terms of inflows overall and first in terms of equity ETF inflows. And I think this demonstrates that there is certainly a demand for clients to get back into that asset class. Coupled with, I would say, also active equity. We saw $1 billion of inflows there in the second quarter across our retail funds. And also, of course, cash continues to be a safe haven and an investment asset class in favour in this moment.
And talk to us about what's going on with your cost base. I see that you've made some strides toward reaching your cost income target, your cost income ratio coming in at 65.7% in the quarter. This is a huge bull case on your stock, but it remains to be seen how many more costs you can take out of the business. So where do you stand?
Yes, indeed. So costs and efficiency is absolutely a focus for us, and we have a cost-income ratio target to achieve below 65% next year, which we're very much on track to achieve. And we've seen that in the first quarter and in the second quarter, where we've seen a stable cost-income ratio for the first half of 65.8%. And that's been stable across both quarters, despite the environment that we're operating in. So I think this is testament to the fact that we can't necessarily control the markets, but we can control our costs, and we will drive and ensure that we meet the efficiency measures that we've put in place. There's obviously some incremental cost benefits that have helped us in this environment. We're not travelling, we're not undertaking physical events. So that has also supported the Q2 position. But regardless of that, we have a sustainable cost base that we will ensure delivers against the cost-income ratio target.
Claire, if I can just hone in on one investment in particular, we all, of course, have been watching developments at Wirecard. DWS is one of the main shareholders in that business. Do you think that there's more that could have been done on the part of the fund managers at DWS, or in terms of overall framework around due diligence, to have caught what was going on at Wirecard sooner?
Well, we are indeed an active investment manager, and we do take active investments. And indeed, we had an investment strategy in our equity funds to invest in technology funds, and one of those was Wirecard. I think we've obviously seen that that's a very kind of unique fraud case that we are now kind of watching the outcome of that. But I think we have a responsibility to make active investments on investment strategies, which is what we did in the case of Wirecard and what we do in active equity funds.